Hello traders, Gary Wagner here. Approximately 8:20 in Honolulu, making it 2:20 in New York. It is Thursday, the 13th day of September 2012, and this is a special report of the daily edition of the Gold Forecast. Ben Bernanke speaks, QE3 starts. We have seen a tremendous rise in the metals markets, in the equities markets, and as I speak, Fed Chairman Bernanke is taking his messages, but the message is clear. There is going to be another round of quantitative easing. That round will initiate $40 billion per month in expenditures to be purchasing assets. Those assets, through his words, are an attempt to jumpstart our terrible unemployment rate and boost that higher. What effect has that had? Well, currently we have the metals up substantially, up about $38 to $40 higher in gold. As you can see, current print, this is the COMEX continuous contract, 1772. Cash market sitting at 1770. That's putting it up about 2.25% on the day. Silver up $1.42 on the day, 4.25% rise in the price of silver, and it is currently trading at $34.68. As you can see on the short-term Henkin candles, we're up near the top. Let's go ahead and convert that over into a standard candlestick chart so you can get an idea of the size of the move we're witnessing today. Traders, we are looking at that chart converted into a straight candlestick chart. As you can see, off the highs a little bit, but certainly a tremendous clip to the upside, absolutely dwarfing everything that came prior to this. We are looking at our weekly chart, Henkin format, trading at 79.91. As I said, weekly chart, but here's what I'm noticing on this particular chart. Did the announcement by Bernanke have a dramatic, profound effect on the dollar? The answer is quite honestly no. On this $36, $37 rise that we see, according to Kitco's index, you have the dollar accounting for only about $6 and approximately $30+ being accounting for straight buying in the market. You can see that right here in the chart. Remember, yesterday we were just a couple of points above it. It hasn't gone up, but it hasn't moved down that severely. You know, traders, let's go back to the weekly Henkin chart just for one more second. Then I want to look at and do a little bit of forward forecasting, tell you where I think this market's going to go, both short-term and long-term, and I'm sure that's what everyone really wants to hear about. But when we place our basic upper resistance line, and really I was looking at this particular set of bodies, it is a little bit above that, would change the arc just a little bit, but you can see that it was clear on a technical basis that as this market traded sideways for a while, the kind of energy, the kind of power that you get on a compression triangle. We have had what R.N. Elliott calls the thrust propel this market tremendously. Now, we're in, of course, at 1636. So according to my calculations, we are roughly $130 in the profit, and that's a pretty good move. That's about 130%, return on this single trade. I'm exceptionally pleased about this last trade that we're currently in. Of course, it's still on paper, but I feel pretty comfortable at this point to say this is going to be a winner, and I think it's going to be a sizable winner. One thing that we do want to take a look at and draw our attention to on the weekly chart, and we talked about this back in July as we saw this MACD coming to a apex in terms of the point in which it was going to cross. You now see these moving averages begin to move apart, and it's that moving apart that's giving it some strength. When we take a look at our weekly chart, Henkin candles, no lower wicks, great sign, great body size. I like it. I'm comfortable with this trade right now. I think we've got the opportunity to see continued growth in this particular trade on the upside. So the question bodes, where could this market take us? Now, we're ascending a lot quicker than I thought we would, and I just want to go back to some basic tenets in Elliott Wave and some basic tenets in straightforward TA technical analysis. And that is, first of all, the next level that I'm really looking for this market to test and take out is going to be around 1802. Where am I pulling that from? Well, I'm looking at these two primary tops after the market itself made a record top 1920 back in September last year, comes off of that, makes a low 1520 down here, right around the 1500 mark, as you can see here, and of course this long protracted base building that we got as this market itself formed a base just prior to it moving up. Of course, that would have psyched many traders out. We, on the other hand, were looking for the breakout to the upside. We were anticipating this move, and most importantly, we were putting trades on so that we would be properly able to take advantage if in fact we were correct. We look back, we nailed this one, and most importantly, we got in properly and we're still in the market. We didn't get spooked out, so to speak, each time Bernanke spoke, and were able to weather the stress, the inability to know what's really going to happen, but believing very, very strongly in the techniques that you use and believing very, very strongly in the assumptions that you made, because I believe they were based on some good, compelling technical evidence. So first area I would look for this market to go is 18, breach that particular area. Now, does that mean that we're going to see this market go straight up? Well, at some point, we're going to see the market retrace for our wave 2. And wave 2 typically on an Elliott wave count is a fairly drastic wave. It can be as much as, say, 61%. So we're going to have to see when that happens, and we're going to have to react rather quickly when, in fact, it does. Now, we've got a little bit of profit taking coming into the market, as I said. We're looking at it currently trading 62.63. It's off the highs, but not by much. My sentiment longer term, as I've talked about before, but today is a good day to bring it up, and that is that just seeing this market equal the move that we saw in our major first wave means that we'll probably see this market move above 2,000. I'm looking at 2,050 to 2,200 as the entire wave. Now, that could be substantially higher. Realize wave 5 traditionally in gold has been the strongest of all the impulse waves. So it beckons the following question. Could, in fact, the market go above 2,200 on this particular move? Possible, yes. I am basing the 2,050 move on 100% of wave 1. And then when we go to our next step, which would be 123%, of course, that's where we're getting the 2,200. Now, we're looking at a daily chart in silver. You can see it trading up near the highs. The question might be, why do we have such variation in terms of this long wick on the top and the bottom? And that is because we're comparing it to the midpoints of the prior day. It's the way they actually fix it. We will convert it, as we did before, into a straightforward candlestick chart. On a daily basis in silver, it's been absolutely overheated. When we asked yesterday the following question, where do we think that silver's probably going to go? I believe my answer was $35 an ounce. And as you can see, we have touched upon that. We are just off of that by about 50 cents, but you've got a 4% move in silver. Tremendous. Next target is obviously got to be just above $37 per ounce. And of course, that is based upon this top right in here. And of course, when you take a look at the standard candlestick, and that's what we're looking at right in here, you can see what a tremendous move it has been. It is trading near the highs. And what's more interesting right now is, remember, we pointed out this tremendous range that we saw yesterday, and the fact that in a candlestick type on a daily chart, it was simply called a hangman. A hangman's a very bearish candle. However, as I stated yesterday, it's simply not something you even consider unless you get the confirming candle on the following day. So it was something that we were able to disregard because we follow basic tenets of Japanese candlestick logic and the rules that are behind them. It's not something that we were going to worry about. However, if it would have been a down day today, that would have been on a technical basis, no doubt, a sell signal. We didn't get that. One thing we might want to watch on this market, because there's no doubt silver is overheated right now, and we have all experienced the speed in which it can go up, but we've also experienced the speed in which it could go down. Because on days like today, it wasn't that long ago. Let me go ahead and compress this chart. It wasn't that long ago. And again, this is a daily chart. 1, 2, 3, 4. In a 4-day period, we watched this market lose about 25% of its real value. This market can come down parabolically, and it can come down hard and fast. So we really want to be concerned with silver. It's a thinner market. We've got extreme profits. We're in at, what, 29.10? So we're in right in this area here. Market is now trading close to 35. We've got 6 cents on the trade. COMEX contract, 5,000 ounces times 6 is not a bad profit for a single trade. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.